So I had mentioned earlier that I'm part of a team called Bloomberg Intelligence, which is the research arm of Bloomberg. So a lot of you might be familiar with my colleague in the U.S., Eric Balchunas. We've originally covered just the U.S. market, but we now have recently launched coverage of the European market exclusively. And again, that had come from a lot of reach out from clients directly saying, we like what you do in the U.S. We would love to see this sort of replicated in Europe. So what I'm going to do here is sort of just very briefly show you where you can access all this just exclusive European data. And also, I'll go into actually some of the themes that we talked about here, some things like flows or bigger trends that we're seeing in the industry. And then also I'll sort of show you forward-looking what we have in the pipeline sort of ahead. Again, this is in the app. This presentation's here, so I tend to speak quickly. There's a lot of slides. I'm going to throw a lot of different things at you. You can follow along here. And again, I'll be here all morning. There's my contact information too, so feel free to reach out. But on the terminal, it's actually very easy to find us. If you do BI ETF, that's the US one. If you add an E on the end, now you have Europe. So there's sort of really two key navigation things you should know. In the middle of the page where it says most recent, this is where we write all our relevant content. Timely flows, we'll do deep product dives, bigger industry trends. When you click into a research piece, you'll see my picture or my colleague's picture there. It's very easy to just subscribe to our research, so anytime we publish anything, you get an email directly in case you don't sometimes want to get onto the page. And the other really big functionality is sort of on the left side, the data library. And this is where you can pull up things like fund flows, probably the most used tab. So here you can pull up fund flows really down into any granular level. So within fixed income, you can look at maturity bands, credit exposure. Within the equity side, you can look at geographical exposure, factor investing. So we have value, momentum, all those broken out. It gets very granular in all the asset classes here. And then all these lists open up, and you can pull out the itemized tickers that fall into each category. We also have the league tables, so you can actually track flows by the sponsors. You can pull up products specifically by each sponsor, and then also you can look at flows by sponsor. So all that data is available there. Another good starting point is just plain ETF on the terminal. This is a really good starting point if you're searching for an ETF. In that sort of yellow box, you can begin to type in specific criteria that you're looking for. So if you're Europe, you put Western Europe as the exchange, and you can start filtering in your screen down to any products that you're interested in. And there's a lot of sort of high-level data there, costs, flows, things like that. And then you can also always go back to BI ETF for a more sort of in-depth look into it. That's sort of where you can find us. I'm going to just sort of go through some relevant pieces that we've written recently just to give you an idea of how we think about things and what are some of the trends that we're monitoring in Europe. One thing I want to talk about flows, and again, this was unrelated to the panel here. We didn't plan this, but the increase in fixed income usage here in Europe. So to give you context, first quarter was a record inflow in fixed income ETFs for Europe. It was 14 billion coming in. It's still pretty strong for this quarter, but it was a record in the first quarter, and that was pretty globally. And I think this sort of speaks to we're seeing an increased adoption and use in fixed income ETFs. Even in the U.S., where it's been even the fixed income ETF market is still smaller, there's a lot of increased adoption of fixed income ETFs. But if we actually break into that bar and show you, okay, where are people buying fixed income ETFs? What's been really hot this year? Euro credit. Flows have been coming out a little bit recently in May just because of the market going down, but of 33 billion have come into ETFs in Europe this year. 23 billion have been in fixed income. Almost 8 billion has been into Euro credit. So what we like to look at, for an example, is not only the size of the flows into an area like Euro credit, but also the breadth of flows. And this really gives us a telling sign that there's mass adoption, that there's a lot of people buying multiple products across different sponsors, across different exposures. So for example, this year, 15 different Euro credit ETFs have inflows in excess of 100 million. So to us, that's essentially like a feeding frenzy of flows. We saw that last year in the US with short duration products, or anyone that had a floating rate product took in money last year. So that's a lot of things that we have to look at. It's not only the size of flows, but the breadth of flows, to really give an indication that, hey, this is actually, there's money moving here and there's actually a real trend. If we actually move on to the factor side, and this sort of speaks to a little bit some of the increased usages. So there's the strategic uses that we talked about up here, but there's also sometimes more tactical usages, especially in response to a market movement. So this is actually very timely. So low vol ETFs, so ones that tend to drop a little bit less than the market. So in May, when the market's been going down, low vol ETFs in Europe actually had the second best month they've ever had in terms of inflows. To me, that's really interesting because that means that that's in response to the market, right? Something's happening in the market and people are flooding to ETFs in a very timely manner. So low vol ETFs are seeing really big inflows this year. And this is really similar to what's happened in the US, right? Where 2011, 2015, last quarter, or end of quarter 2018, there was this influx into low vol ETFs. So we're starting to see some of these similar flow patterns in Europe. And to me, that's really encouraging. That shows more adoption and more sort of usages in them. And it also speaks to this year, a little bit more defensive positioning. Low vol is taking in the most money of all the factor ETFs in Europe, also quality ETFs. And granted, all these charts can be built through the functionality that I showed you before. So these is all broken up for you. It's very easy to pull up these charts. So this was no extra work. You just go into the terminal, you can look for the low vol flows, or you can search for Euro credit, and you actually pull these up. Moving away from flows, let's talk about some of the themes. So some of the bigger things that we think could potentially impact the industry here are going to have a role in shaping it. Probably the biggest trend of all, and we sort of saw it with the polling, expenses, right? So the bigger shift is sort of the shift to low cost. So if you look at the bars, those are flows by expense ratio. So over on the left is products priced 0 to 10 basis points. The yellow bar is US, so 65% of the flows in the US go to a product that's 10 basis points or lower. Europe is still skewed to the left, but it's not as intense. One thing I will mention in all fairness, there's not as many products at 10 basis points or lower in Europe as there are in the US, but that's changing. We saw a lot of launches in the last 2 years. Amundi's Prime lineup, JP Morgan, Luxor, Vanguard. A lot of these now very inexpensive below 10 basis point launches are happening in Europe. So we expect that graph to just keep moving over to the left even more. You know, the cost obsession to become even probably stronger. The other thing that was really interesting is this is a huge sort of booming industry within ETFs, thematics. As sort of the core lineups are getting really competitive and they're really competing on cost, a lot of issuers are sort of looking to be a little bit different and they're launching thematic products. And what's interesting is in Europe, I feel like thematic adoption has been much faster here than it has been in the US. Because essentially what happened, the US would launch products, Europe saw which ones were successful, they launched them here, and the adoption was really almost immediate. So I think we're going to continue to see a really big push in thematics as issuers sort of try to differentiate themselves away from just core cheap beta exposure. So thematics, and also why the sponsors like them, the fees tend to be a little bit higher in thematic ETFs because their exposures are unique. And I'll show you a little bit later, we actually built a pretty unique tool to be able to measure and sort of track thematic ETFs and how you actually know you're getting the right exposure. Another area that we're really bullish on is multi-factor ETFs. So I had mentioned low vol before, but multi-factor sort of takes multiple factors together. So a lot of times you tend to see factor cyclicality and investors going in and out of certain factors. Multi-factor packages all of it together. Why we're pretty bullish on this space is a lot of the flows that are coming in ETFs are from active mutual funds. And we think multi-factor sort of serves as a pretty natural stepping stone, not going fully passive, but sure, it's indexed, but it really feels sort of quasi-active. So we're seeing a lot of uptick in number of product launches, but also in the adoption in the assets in multi-factor. And why the sponsors like these two, the assets there tend to be more core. These are meant to be core replacements, so the assets tend to be stickier. People aren't really trading in and out of multi-factor ETFs as much. Active, something that I had brought up before with Andrew on the panel, but the active world in ETFs is still pretty small. In the US, it's about 2% of the market, it's about 1% of it here. But we think that this potential ruling now in Presidian really is going to open the door for more we're definitely going to see more active launches. I know that the asset managers are excited about it. We're going to be really tracking to see if investors are going to be excited about buying active ETFs. So we think that there's been definitely an uptick in active ETF launches, but we think definitely the Presidian model is going to prompt a lot more asset managers to come into the industry, and we're going to see a much bigger uptick in active ETF launches. We have these lists that we sort of put together every year in the US, and I sort of replicated it here, sort of this ETF Rising Stars list. So what we try to do is also, we cover the industry in all different facets, but we also try to identify small products that are sort of growing really rapidly, sort of these hidden gems. So just to give you an idea of how the list looks, some of them are sort of real actual demand, other ones might be a byproduct of an index change. So for example, the top one's Saudi Arabia. That's because of an MSCI index change. But when you also look on the list, fixed income, a lot of those fixed income ETFs make the list, a lot of factor ETFs. We're seeing a really big usage of also factor investing here and in the US. So we keep this list, we update it every year. Also on the flip side, we have a Fallen Angels ETF, so sort of ETFs that were really big at one point and they sort of fell by the wayside. The spoiler alert here, it's all European bank ETFs. Those pretty much make up most of the list. And anything inflation related, some of those expectations have come down. So some of these ETFs have seen some pretty big outflows. This, I think, is really interesting in Europe because we haven't really seen a lot of it in the US. So about 2 years ago, maybe a year and a half ago, the FCA did an investigation. They were looking for active funds that were closet indexing and charging sort of higher than normal fees. And they fined them. And they actually said they had to pay back some of the fees to the investors. So I think this indexing police is going to be a big catalyst for the industry. And we sort of talked about it a little bit on the panel, but now in the United States, we've seen some similar reports that the Attorney General in New York started being a little bit stricter on these closet indexers. But essentially, I think as there's more scrutiny from the FCA, from ESMA, it essentially is going to split the industry. These closet indexers are either going to get pushed to very high active share active or into just really passive ETFs. So I think potentially this scrutiny on closet indexers is going to bring down fees or potentially push more assets into the passive side. It's interesting because we don't have as much of that in the US happening. Let's sort of look forward-looking, some tools. One thing that we launched in the US that's gotten a lot of good feedback is this objective sort of third-party rating system. So we rate all the ETFs in the US, green, yellow, or red. And what I mean rating is we look at more things from an operational aspect. So we're not going to say we favor emerging markets over developed. We're going to look through an ETF and we're going to highlight things that maybe aren't maybe really known at the surface level. So if the ETF uses derivatives, if it owns other ETFs, if there's hidden costs, if it has poor tracking, if the underlying primary market is not liquid, we actually pull up a composite score and assign it a rating. We're going to build this out in Europe. Data is obviously a little bit different here, so we sort of just have to figure out a way to make it work in Europe. But just to give you an example how something would play, so VOO, so a fully replicated S&P 500 ETF would be green. Really, we don't see anything operationally deficient there. But something like a triple levered VIX ETN would sort of fall in the most aggressive red light. Another thing that came up a lot, and some of these requests we get are actually from clients. So someone had asked us, what's the best value ETF to buy? Well, there's not a straight answer there because there's a lot of things that we don't know about your portfolio, what kind of exposure you're looking at. So what we had done is we are building out this smart beta spectrum. So basically, if we look value, for example, how much value do you know you're getting? How much value exposure are you getting from your value ETF? So we have tools in-house like Port. We'll look at turnover. We'll look at concentration of holdings. And we actually sort of lay out the different factor ETFs from anything from the very aggressive pure value ETF to something that's maybe a little bit more watered down, maybe tracks the market a little bit closer, but also has a hint of value. Just because smart beta and factor investing has gotten so popular, we just saw a need to have a little bit more tools on that. And this other one was really interesting. It's sort of just the growth on thematics. And the lineup in the US is much more robust, which is why we sort of launched that there. So like, for example, there's like 5 robotics ETFs in the US. There's marijuana. There's now multiple marijuana ETFs. So a client would ask us, well, if I'm buying this robotics ETF, how do I know I'm getting the right exposure to robotics? How do I know I'm getting exposure to that theme? Because some of these ETFs might just look like a tech fund. They're not actually giving you anything different than just buying like an XLK. So we actually put this score together that will look at all the holdings within the thematic ETF and say, okay, how much revenue is actually derived from that sector that they're trying to target? And also, how different is the ETF from a broader sector fund? And we actually put this, it's called the BI Thematic Capture Score. So it actually gives you an indication of, okay, among these different thematics that are tracking the same thing, which one actually gives me the purest exposure to that theme? This actually, we just sort of kicked this off in the US, but given the growth of thematics in Europe, we're going to also bring that here too. Andrew had mentioned the aggregated tape. You can actually pull up the DES page. So Bloomberg is always giving out tools or building out tools for increasing transparency. If you go to the DES page and you pull up a European ticker, there's a now 90-day aggregated volume number that you can pull up. They're highlighted in green, sort of in the middle of the page. So you can pull up any ticker and that data is now available. And lastly, just to remind, BI ETFE, it's very easy to find us. We're very engaged in social media. Anyone who knows Eric Balchunas is very engaged in it. So I left my Twitter handle and my email. We also have a passive newsletter that we send out every month, and we have an ETF distribution list sort of sending out our research or any events that we have planned. So you have my contact information there, but feel free to reach out. I'm happy to add you to our distribution list or happy to follow up with any of the content that we've written here because we've written about these pieces extensively, so we have all the data, so I'm happy to discuss more. So thank you very much.